Welcome to a fantastic edition of Rebellion's educational series. I have two legendary guests with us today, Cameron and Tyler Winklevoss. These two have been impressing me since the 90s. When they were at Brunswick, I thought they were two of the smartest kids around. Then in 2002, they told me to look into social networking. I didn't really know anything about it. I was kind of a video game programmer at the time. Then they were talking about Bitcoin in 2012. Between Bitcoin and social networking, two of the greatest venture capital investments in the history of the planet. Cameron and Tyler, I'm honored and humbled to have you on today. Thank you so much.
Thanks for having us on.
Thanks for having us.
It's
great to be here.
Oh, it's absolutely my pleasure. So most of our viewers either own or want to own Bitcoin. And their first question is, what is the end goal? Is this going to supplant the US dollar? Where do you see Bitcoin 50 years?
So it's a great question. We think the end goal for Bitcoin is disrupting gold. We think of Bitcoin as gold 2.0. If you look at the qualities that make gold valuable, Bitcoin matches or does better on all those qualities across the board. So gold is actually scarce in supply, but Bitcoin supply is actually fixed. Gold is sort of portable. You can carry it around, but Bitcoin works like email. So if it's gold 2.0, its market cap should be the market cap of gold, which is 9 trillion. Today, Bitcoin's market cap is around $400 billion. So there's something like a 25x from here if Bitcoin's to disrupt gold and have a $9 trillion market cap. So that's sort of our long-term thesis. And we've been talking about this for the last 8 years when we first bought Bitcoin. And so today, right now, Bitcoin, I haven't checked the price, but it's just, let's say it's $22,000. If we're right, each Bitcoin would be worth $500,000. So $22,000 is still actually a pretty big buying opportunity.
So do you see Ethereum and XRP as kind of a silver and a copper relative to Bitcoin as a gold?
We don't. We think Ethereum is sort of like this decentralized operating system in the cloud. And XRP is trying to be like a payments rail. I don't think it's gotten a lot of uptake, and it's trying to solve a different problem than Bitcoin, which is really hard money. And it's kind of the easiest way to analogize it is like software gold. If gold is hardware, it's been around for thousands and thousands of years. Bitcoin's really that software version purpose-built for the internet, and sending that kind of value through the pipes that we use on the internet.
What do you feel about tokens? You know, JP Morgan's doing a token. You guys met with your former programmer about Libra. What is your feeling there?
Yeah, so stablecoins are interesting. It's this concept of bringing dollars onto the blockchain. And like we mentioned, Bitcoin is emergent sort of value. It's like gold. You don't want to spend it because it appreciates. Just like you don't want to spend your Amazon stock because it still goes up usually if you believe in the company. You want to spend things that lose their value to inflation over time. So the dollar is a good example. It slowly loses its value. So you don't want to sit on dollars or put them in your mattress because you lose your purchasing power over time. I think since the 70s, the dollar's lost 90% of its purchasing power, whereas gold during the same time period appreciated like 23x. So you want to spend dollars like currencies, and if you want to spend them on a blockchain, then you've got to tokenize and wrap them, and then you can send them around the blockchain. So it's really about bringing dollars on the blockchain, which I think comparing to a hard money like Bitcoin is really apples to oranges just because of the different nature.
So what do you say about something like Ferrari, where you have a limited supply, a fantastic demand, and they can be sold? So could you see Ferrari as kind of this hybrid Bitcoin gold, if you will, and that Ferraris could eventually be some type of very large, currency pocket?
So do you mean like the properties of like a Ferrari being sort of very liquid and almost near money, in the sense that if you buy into one of them, you can sort of sell out pretty quickly, and it probably retains value? Is that sort of what you're referring to there?
Exactly. So it's a place to store value, because, the big worry with Bitcoin, at least that we found a rebellion with our clients, is if I put $20,000 in a Bitcoin cyber wallet, what are the chances a Russian hacker will come and take my wallet away? What's your comment on that?
Right. So that's a really good question. And like a classic store of value would be real estate. But obviously, like the challenge with real estate is the transaction costs and really that the sales process is not quick. Whereas in Bitcoin, you can move in and out millions and millions of dollars every day and not really move the market and have a lot of slippage. So that brings us to like the hacking question. And that's one of the reasons why we built Gemini, our cryptocurrency exchange and platform, to create like a really safe and simple way for people to buy, sell, and store Bitcoin.
So
to be clear, a Bitcoin wallet on the blockchain has never been hacked. That cryptography, brute forcing someone's private key has never been happened. What happens is people lose their private keys. They store it in their computer gets thrown out. Someone phishes them. Just like someone can phish your email login credentials, someone tricks someone into giving them over their private key. But the idea of someone hacking a private key or guessing it directly has never happened.
Wow, it's very interesting to know.
Yeah, what happens is the companies on top of it, like the banks, they go under, right? Not the currency itself. So Mt. Gox famously was hacked. We actually don't know if the guys operating it lost their key, got hacked as a company, but that sits on top of the protocol, which is very different, right? The protocol layer. But it takes a lot of expertise to store a bar of gold even, right? In your own apartment, because what if the plumber comes over, you got to get a safe and then they can draw out the safe. So oftentimes people offload that to a bank, but not all banks are created equal. So you offload it to a trusted bank that's regulated. And that's what we've done with Gemini. We're a New York trust company. We're regulated. We have security experts, and we solve this problem. So offloading that security problem to us, we think is a great idea. But there are a lot of exchanges out there that do not have licensing, do not follow the procedures that we do. So that
was my point about the Ferrari, the ability for fluidity with transactional value. So with Bitcoin, you can actually go travel to Japan, use it to buy hot dogs, your airplane ticket there, and take it to a show. Whereas if you have a Ferrari and you stored value there, it's rather hard. Plus, theft is a major issue. Plus, you have to deal with wear and tear. So
right,
yeah.
And it's also not very divisible, the Ferrari. And
exactly.
art is another great way to transfer like a lot of, or carry a lot of value or store a lot of value, assuming you pick a blue chip artist that is in value and or increasing. But I think, the challenge with art is, of course, it's sort of one unit. And so if you buy a Warhol, you've got to sell that whole Warhol to sort of cash in and out. And again, there's transaction costs, there's insurance, and there's a lot of sort of overhead and friction in that market that doesn't exist with a fungible store of value like Bitcoin, which is really near money and divisible up to like 100 million pieces. So it really, if you look at the store of value properties that Tyler was mentioning earlier, it equals or betters gold and art and all of those classic stores of value in many, many ways.
And that's what Paul Tudor Jones is saying. He believes in the Bitcoin Gold 2.0 story. In the 70s, one of his famous trades was gold to hedge against the high inflation rates in the 70s. Today, with all the money printing and stimulus and debt, he thinks that trade is Bitcoin. And you're seeing others like Stan Druckenmiller, other hedge fund legends follow suit with the same Bitcoin is gold 2.0 thesis.
And one of the coolest developments has been MicroStrategy taking their corporate treasury and investing, I think, $400 million plus into Bitcoin. The thinking there being that
traded company,
that if they hold it in cash, they're going to lose a lot of value over the next 5 years. And Michael Saylor, who's the founder and CEO, has elected to put the majority of their treasury into Bitcoin. So you can actually buy MicroStrategy, and in doing so, you own like a pro rata share of their Bitcoin treasury. And I think the ticker has gone up. It's at least doubled since they put that trade on, and it's probably up a lot more today, even beyond that.
The US dollar is constantly losing value every second we speak here. The amount of printing that's going on with the dollar and many other currencies is just, it's absolutely insane. And when you get to 0% interest rates, there's really no way out. In fact, the ideal economy is one with much higher interest rates. You know, your brilliant father, one of the few things I could discern from his textbook was that, in fact, an economy needs higher fixed income rates, not these 0% rates. So it makes it much tougher for pension funds to fund themselves when they have 0%, plus it kills the bank's model. So I saw you guys did a deal with Paul Desmarais' Wealthsimple. Paul's a very old friend of mine, and I was curious about that. Can you speak to that?
Yeah, sure. Yeah, we know Paul actually from our days at Harvard. Great guy. I don't have the details. I didn't work on that specifically, but we've integrated with the platform so that they can use Gemini to buy, sell, and store cryptocurrencies. So a lot of people don't want to reinvent the wheel that we've already built. It's very hard to custody digital assets. It's very hard to build an exchange matching engine. So when we say Gemini is an exchange and custodian, what that means in cryptocurrency land is that we're basically 4 companies in one. So in equities, you have E-Trade as the broker dealer, you have NASDAQ as the matching engine, you have DTC that clears, you have State Street that custodies. In cryptocurrency, Gemini, all these 4 businesses are vertically integrated into one. So we take the orders, we match them, we clear them, we settle them, and we custody them.
Wow.
So a lot of people want to plug into that infrastructure to give their clients exposure to cryptocurrency. We're also, and because we're customer facing, we're also doing the KYC. So it's like a bank account. It's all of those different things. And so a company like Wealthsimple can plug into our platform, use our software under the hood, and give that access to their customers.
Another good example is there's a fund called 3iQ that trades on the Toronto Stock Exchange, and they use us for custody of their funds. So that it's sort of a fund. It's basically the closest thing to an ETF trading in Canada. And I think actually you can get it in a lot of US brokerage accounts, but they plug into the custody piece of our stack, whereas Wealthsimple plugs into both the exchange and the custody piece of our stack. So a lot of companies, that's sort of the B2B model of Gemini, where if you have a fund and you need a custodian or you need to source liquidity, you can use Gemini, or customers can come direct to Gemini.com and just onboard like they do any online bank or brokerage YC, and then you can just buy, store, and sell directly on our platform.
Mm-hmm.
Fantastic. It's absolutely very cool. I remember Bob Pittman, the former COO of Time Warner, told me that, after the dot-com bubble burst, he said, invest in the infrastructure companies. But with Bitcoin, you guys have both the coin and the infrastructure, so you could really make significant profit from this. And if Bitcoin does rise to 400,000, 500,000 a coin, as some have predicted, would you sell at those levels, or would you just not want to discuss such a situation now?
Well, it's a great question, and there's sort of a meme in Bitcoin or on crypto Twitter that when it gets there, you won't have to sell. So if you need cash, you could always borrow off of Bitcoin, which you can do today.
Oh, I love that. That's fantastic. Yes, I get it. That's awesome. I love it. I love it. Yes. No, when it gets there, go to TJ Maxx.
Yeah, exactly. And if it does more than just, is it better gold, right? And that's just if Bitcoin's a better store of value, it doesn't have to be spent, right? Because no one's buying coffee with gold. If it's just a better store of value, it's 9 trillion. If it also becomes a payment network or somehow secures another payment network, is like the global digital reserve cryptocurrency of the world, then 500,000 a Bitcoin is actually a conservative bull case. It could be much more.
Yeah.
And I think
that's a very good point. That's a very good point, which absolutely defeats the 500,000 as a total prediction and would then imply a much higher valuation. That's true.
Totally.
We think it's conservative. And if you look at the addressable gold market, gold is not held by a large majority of people around the planet because smartphones are built to hold private keys, and they can hold cryptocurrency like Bitcoin. They can't hold gold. There's, I think, 3.5 billion smart devices on the planet, smartphones, and every single one of them is capable of holding digital gold in the form of Bitcoin. None of them can hold physical gold. And so it again goes back to like the portability issue. Like gold has serious limitations in terms of getting to access to many people around the globe, and Bitcoin doesn't have that. So we think that gold is sort of the starting point, and that sort of ends at 500K. And then there's another sort of story beyond gold that I think the sky is sort of the limit in that respect.
I think we'll be seeing some sovereign nations announcing that they store their reserves in Bitcoin. That could obviously have a huge effect on the prices. So, yeah, I mean, the potential is absolutely immense for Bitcoin. And, you know, the bull case is there. What do you think is the greatest bear case for Bitcoin? And what do you want to speak to that?
In my opinion, the bear case is more of like a time thing, like how long does it take? And I think that regulatory clarity in the US has actually been pretty strong. The CFTC declared Bitcoin a commodity in 2015 in the coin flip order. Most people don't know that, but basically in an enforcement action, they declared Bitcoin a commodity similar to gold. And that was affirmed by a judge in New York, I believe in the Eastern District or Southern District. And so the legal classification in the US has actually been clear for over half a decade. And that's part of the education gap that we need to continue to like fill with Bitcoin and crypto.
So when will the ETF be approved?
So that's an SEC, that falls under the SEC, and we're optimistic that within the next sort of 2 to 3 years, we think that there will be exchange traded products holding Bitcoin in the US. It's hard to say because there's a transition going on at the commission. And we'll just keep sort of watching that. But we actually filed our first ETF filing in July of 2013. So it's been about 7 years. We think that, you know, it's probably, you know, within a 10-year journey of that first filing. So we think, you know, we're optimistic in the next 2 to 3 years. And so much has happened positively in the market in terms of development of derivatives, better exchanges, more license and stuff like that. But I think the bigger challenge is sort of regulatory uncertainty, or if regulators sort of take time to build that thoughtful regulation, it sort of slows things down. And so I think, I mean, we think Bitcoin has always been really a when, not an if situation, because really to stop Bitcoin is just the internet. And that's not viable for the vast majority of countries around the world. You just simply can't stop it. So what you have to do is figure out how do you thoughtfully regulate this. And New York has really led the charge. Their Department of Financial Services has done a really good job of you know, regulating businesses like Gemini. We're a New York trust company, one of the oldest banking licenses around, and we are, you know, regulated by New York banking law. But I think there's other places in the world that are a little bit behind. But I think that's ultimately the biggest risk there, not an if, but really how long does it take?
Fantastic. This was a really amazing conversation. I thought you guys were brilliant when we were 15, and you guys have only gotten smarter. I couldn't be more thankful. And I guess my last point is, do you have any parting thoughts for our viewers?
I would say so many, but I'll leave with this. You know, it's still really early with Bitcoin. Bitcoin's here to stay. Crypto's here to stay. We think it's the most significant technological and value money revolution since the internet itself. So I'd encourage people just to dig in and educate themselves. I personally love to have a little skin in the game. That focuses me in my learning. And you can start small, right? Bitcoin, you can buy a fraction of a Bitcoin. You can buy $5 of Bitcoin, 100. A lot of people think you have to buy a full Bitcoin. But definitely take the time to learn, because you know, this is the most significant thing since the internet itself, and it's here to stay. It is the future, so pay attention.
It definitely seems that
Yeah.
way. Yeah.
Those are great thoughts. And I would just echo that with the idea that, I mean, Alex, how would we have operated or thought or behaved differently if we could go back to the late 90s today, knowing what we know happened with the internet and technology stocks and internet infrastructure? And if we could have bought a piece of real estate on the internet, like a 4-letter domain name or something like that, but the problem with the internet, it was hard to actually buy real estate. There's no physical property on the internet, but Bitcoin is the sort of the native asset property of the Bitcoin network. And by buying Bitcoin, you're buying a piece of that network, a piece of the internet of money. So we often take our frameworks that we sort of learned over the past 25 years, looking at the internet, and apply it to this future of money. And so the question is, like, yeah, if this is the sort of the biggest invention since the internet, how would you act? And if you could go back to the late 90s, how would you act differently? And I think we all would have probably, gone long things if we had, we were obviously younger back then and we didn't have the capital to put behind an Amazon.
No.
But knowing what we know now, Amazon used to compete with Barnes and Nobles head to head, and people thought that Amazon was a bookseller. And obviously that story was completely different. So yeah, pretend you're in the late 90s and you're looking at the greatest, invention that's in front of you. How would you act?
Right. And because your audience is financial folks, Bitcoin is not a stock in a company. So you don't value it the same as you would in equity, right? With a discounted cash flow model or some other model. It's a network. Money is a social network. Bitcoin is the greatest social network of all. So you value it like a network. And there's a law called Metcalfe's law, which is n squared, n being the number of nodes or users on a network. And n squared equals the value of the network. So it's important not to take your framework from capital markets equities and apply it to Bitcoin, because you won't get it. So you have to look at it like a social network, similar to a Facebook, a Twitter, money. So that's, those are my parting thoughts.
And that's why Warren Buffett doesn't like Bitcoin. And quite frankly, we think he's wrong in a really big way, because he's looking at it as a company and he's looking at it the wrong way.
Well, his Kraft Heinz deal never made any sense to me. But at the same time, some people say, investing is an art and the ability does wane over time. I'm not saying his abilities have waned, but nevertheless, Warren Buffett's obviously done great things. But you guys have done great things too. And couldn't be more thankful to have had you on. You guys are fantastic.
Thanks so much, Alex.
It's been a pleasure.
Stay safe. Bye.
Good to see it.